Hi guys, welcome back. In today's video, we are going to be covering the part 4 of the AC manufacturing space. So as of now, we've done three companies right in this AC manufacturing space. We have done Amber, we have done PGL, we have done EPAC Durable, and now the fourth company we'll be doing is Virtuoso Optoelectronics Ltd. Now this is a relatively small cap. It falls also under the SME, right? The market cap of this company is less than 1,000 crore. To be specific, it's 980, 920 crore kind of market cap. Okay, and you have PGL, which is like 18,000 crore, and Amber 2 is like I think north of 80,000 crore market cap, right? So we're going to be covering this company. We will, and by the way, this is the first time I'm covering it in this channel, so I will be sharing the screen and doing it, right? We will cover the business model, we'll cover the guidance, the numbers, and everything. The valuation also for this company we will do. The P2P video that is there of all the companies I will do in the another video, the coming video, okay? Because I think this video, since I'm sharing the screen and explaining everything, it will take I think around 20 minutes. And if any video crosses more than that, that specific time, then it just becomes too tedious for me to upload. So that's the thing. Anyways, now let's get back. I'm going to be sharing the screen, and yeah, screen is shared. Anyways, so we'll be talking about Virtuoso Optoelectronics Limited, right? So this company was started in the year 2015, and this is a like it says in the AC manufacturing space, right? They started actually by selling this light and different kinds of light, okay, and then they ventured out into this AC space. Over here also they do both, but they're main into like I told you, they do OEM as well as ODM. In the OEM, like I told you, original equipment manufacturer, you have the control over the entire value chain from designing the product to getting the raw materials to doing the finished product. Whereas in terms of in ODM, that is the case. In OEM, let's say if it is Voltas or Panasonic, they give you they give you the specification, they give you the design. All you're doing is you're just manufacturing that and giving it to them. Okay, so obviously over here, if you look at it, the ODM will have higher margin compared to OEM, and these people more or less they fall in the OEM category. That is where the huge part of the revenue comes from. Okay, now other than that also, they are, like I told you, these people are a small company. They're based out of Nashik. In Nashik itself, they have 6 plants. Okay, so all the 6 plants that are there as of now are all in Nashik itself. Okay, now what do they exactly do? Okay, anyways, before going to that, you can see over here there are 6 plants. This is the they have different plants. In one they're doing LED lighting, in the other they're doing AC manufacturing, right? Again, IDU matlab indoor unit, that is the AC you put indoor. Audio matlab, like over here, can you see, you would have seen this outside, na? All of these things, like outside the shops or even outside your own apartment, if you have AC, you would have seen, na, the outdoor unit, which is like, to take that exhaust, the gas or the from the AC, that is the indoor, and it puts it outside. So this is called as ODU, right? And again, these are the different plants, and every plant makes a certain set of products. Okay, now let's look at the business model. As you can see, there are different verticals over here. The first vertical is the AC vertical and the AC component. Over here, they make indoor unit and outdoor unit. Like I specified, indoor unit is the AC that you put inside the actual AC. Outdoor unit is this component, right? Now, you have other, AC components, ke liye, the things that goes inside that AC, right? Such as your wires, your copper tubing, the outside the plastic part that is there. So they make this as well as they make AC as well as certain components that goes inside the AC. And this, like I told you, is a majority part of the revenue. In fact, around 80% of the revenue comes from this AC and AC components. Okay, so this is one. The second is this is electronic manufacturing services and LED lighting. Like I told you, these people started by being an LED or a light company, and then slowly they ventured into this all AC and other components. Over here also, they make one part of here is they make different kinds of LED lights. The second is they make remote your, specifically your AC car remote, all that, and the other is controller boards. Now this is a new segment that they have entered. They have entered recently only, in the last year only they have entered, especially in the second half of last year they have entered. One is water dispenser. Okay, you might have seen, you'll have it in your gyms and all that, hot and cold water you get, that big unit, those kind of water dispenser. This commercial refrigeration is yet to start. It is about to start. It is not there. It will start in Q4 of this year. Okay, so these are the three main categories, or these are the products that they make. This is where the business car revenue comes from, right? Like I told you, see, these are the different products: indoor unit, outdoor unit. I'm pretty sure you people have seen this in your lifetime. Different kinds of LED light, water dispenser, deep freezer. Deep freezer comes in that refrigeration part, this part. Okay, they are making when you talk about refrigerator, they are making both That is the B2C, like how we use a refrigerator in home, now that we have that kind of refrigerator, as well as a refrigerator that goes in your, all these commercial kitchens, the huge one which requires a lot of freezing, that, and different like deep freezer and all. Okay, and the other, like remember the controller board, and these are the other like copper tubing, like we saw the other AC component, remote and all. These are the different products. So you understand what the company is making, right? That is clear. Now let us see the revenue bifurcation के लिए कहाँ से कितना कितना आता है, ठीक है? Now can you see the AC component is where the maximum revenue is coming from. 80% of the revenue is coming from AC, right? And the other two that we saw, that is the electronic manufacturing, and then we saw the what was the other one? LED lights, the water dispenser. This contributes now around 20% of the revenue. Okay, this AC is still the majority part. Now AC, as you can see, AC ka margins is very low. AC ka margin is hardly 6 to 8%, and lighting is around 10 to 15%. Okay, this is a margin that is there. Of course, now since you are getting more revenues from AC, and the margins in your most sold product or the most contribution for the revenue is having hardly 6 to 8%. Now you understand why this company will be having low margins. You will see as to like why these people have low margins. So now you understand ki like why iska low margin hai. The second reason also why these people have low margin is because, see, these people are a B2B company, right? These people are making AC and selling it to other companies such as Voltas. Now, of course, in any B2B, as you know, margins, if you have to see, B2C greater than B2B, greater than B2G. That is consumer side greater than the business side, greater than the government side, right? Well, let's say when your revenue is coming from the government segment. Now over here also in B2B, let's say if you want to enjoy very high margin, let's say you want to have north of 20% kind of margin, or even north of 15% margin, it is not impossible, it is possible. But the problem is, whenever you are a B2B business, your product is more like a commoditized product. Let's say if you're able to provide a very high quality product that nobody else is doing, you have some patented technology, then you can command this higher margin. Otherwise what happens is, since the same product can be made by others also, right, then it becomes, that is why you see all of this time for all the B2B businesses, you see that the margin is low is because of this reason, right? It is just inherently the nature of the model. It is just inherently that, it is how it works, that B2C will always enjoy a higher margin compared to your B2B, compared to your B2G. It's nothing to be worried about. It is just how it goes. Okay. So, yeah, so this is the other part. Okay. And if you look at the customers, can you see Voltas and Panasonic contribute 80% and the rest of the people contribute around 20%. Okay. Now over here, if you look at Voltas, now this out of this 80%, Voltas still contributes around 70% of the top line, 70 to 75%, especially in H1FY25 also. They contribute a huge numbers to the top line over here. Take care. Now let us talk about, so now I believe you people understood what the business model is like, what is the margin, what is the revenue bifurcation, and who are the customers are. Before we go to the capex, let us talk about the Q2FY25 and H1FY25 result. Like I told you, this is a small cap company, so as a result, inka result jo hai, it comes only in Q2 and Q4. Okay. I need to keep checking this because somehow I feel like, I'm going to record, and I mean, I'll be talking and the recording stops and like, I'm just talking to a dead end screen. But anyways, coming back, right? So over here, if you look at this company, when they came out, even in the starting of last year in FY24 and before that also in the following year FY24 ka H1 and H2, these people had come out with in their PPT and the con call they had told like we are targeting 35 to 40% of CAGR for the next few years, right? That is what the target was. And so of course, if you do a backward calculation, then you get certain amount of revenue estimation. And not just that, for H1 the target was that they will do around 280 to 300 crore, and they have done in H1 310 crore. So overall, not a, it's not something like, the result has been good. Okay. So first of all, from when you look at the income statement, you see the sales, you see that the sales has grown by 29% on a year-on-year basis. H1 over H1, a little bit, not that much of a sale. H1 over H1, the sales has grown by 5.7. If you look at PAT also has grown by a significant amount, both on a year-on-year as well as half yearly basis. And you can see that the company also enjoys a good amount of operating leverage also over here. Okay. Now talking about the EBITDA margin is at 9% versus 9.8% last year. Now, if you look back at the business over the history of time, you will see that the previous year, I think 2 to 3 years back, you see that the EBITDA margin was north of 12%, or I think the maximum was 12% only. Okay. So why has this EBITDA margin fallen from 12 to 9%? And in fact, if you see, right, last year it was 9.8, now it is 9%. So what is the reason? Like I told you in the beginning of the business model, right, most of the contribution is from ACs. And AC is a low margin business compared to your other products that is there. And over the years, you've seen the contribution from AC has only increased. And that is why the EBITDA margin has fallen. That is the only reason. Nothing structurally wrong with the business. It is what it is, right? Like we saw, right, in that business model that we were checking, right? We saw that AC has around 6 to 8% margin, whereas that lighting product has margins of at least a maximum 15%. So that is the reason you see that EBITDA margin is at 9%. Okay. Similarly, if you look at PAT, you can also tell like, I mean, PAT has grown by this rate. I mean, we are seeing a huge operating leverage, and yet you see when the PAT margin that is there is merely 2.7 versus 2.3 last year. Like, why is the PAT margin also so low? Again, coming to the PAT margin also, this company is doing a lot of capex. Okay. Now, when you talk about every income statement, every accounting, most of the time, certain companies do a little bit accounting different compared to the other. Now, when accounting may, like the way you calculate depreciation, they have taken all the depreciation upfront. There are two methods, straight line method, and there's another method. So they have gone to the other method where usually you take the depreciation that you take. Some people, some companies do it like over the quarters. They take they do it, or some people take upfront, because of which the margins can look very skewed, because and the profits can look skewed. And this is one of the reason, since the way they have been doing the accounting, they're taking the depreciation upfront. That is the reason you're seeing PAT margin is at 2.7 versus it was 2.3% earlier. Okay. Now coming to the different business segment that you see when you talk about, like I told you, right, they have the AC segment, they have electronic manufacturing and LED lights. Now look at this, every other segment also has been a very high growth engine. First of all is your AC business. AC business is the most important, right? Because 80 to 85% of the revenue is coming from here. Now, if this business tanks, then of course, right, what is the point? Aapka jo electronics business bhi acha kare, it doesn't matter, because this is the most important thing. And the AC business grew by 33% on a year-on-year basis, which is quite a good number. Now, of course, you might feel a bit disappointed over here comparing it to the others, because if you look at PGL ka RAC business grew by 212% on a year-on-year basis and 143% on a half-yearly basis. If you look at EPAC Durable, I believe EPAC Durable also grew at north of 100%, I think 112% on a year-on-year basis, I guess. And Amber also had a very high rate. So of course, when compared to that, you might feel कि like अरे ये तो छोटा है. But understand over here also, इसका scale like is, I mean, think about this. These people are making a revenue of 310 crore in H1, and whereas PGL is making what, 2,794 crores in H1. If I'm not wrong, they did 2,794 crores, right? So it was not at all a comparison, because PGL is like 10 times more compared to this now. So of course, even with at that scale, the growth is also going to be more compared to over here. Like 310 crore, kaha 2,794 crore. In fact, PGL, what a tremendous, I mean, what a good company, I'll tell you, is because FY24, I believe their revenue was around that. I think FY24 revenue was 2,794 crores or odd, and they have done similarly in the product line. I think they're targeting this year. Anyways, we're digressing. Let's come back. Okay, so EMS, that is the second part, electronic manufacturing services, where they make that remote control board and everything, that grew 30%. And component business, remember in that AC ka division, there was this AC component that we saw. Where is that? Yeah, component business. Can you see this part where heat exchangers, plastic and EPS part, all these other different, these are the components part. This grew 10% on a year-on-year basis. Okay, so overall you see that the sales is good. We saw that the business model is great, right? We saw that the sales is good. All the divisions are also growing. There is no kind of headwinds. There is no headwinds that we're seeing. In fact, the tailwinds over here are also quite good, right? Because see, these people are making revenues from their AC, and we have seen in the AC segment everything is going well, because the entire industry is only growing at 25% CAGR. So of course, all the companies are bound to grow way more than that. That we're seeing so much demand is AC. One, we had a very favorable summer this year, but along with that, there has been a lot of schemes by the government also. Like what they have done is, let's say all the AC companies that are there, AC companies like Voltas, Blue Star, who sell your ACs, right? Now here, what they have done for these companies, they put a lot of restriction as to like, you can't get this imported, this part imported, that part imported, which is forcing forcing these people to source a lot of the products and to get it manufactured in India itself. That is why you're seeing all the AC manufacturers in India are making a lot more money. They're having the highest amount of sales growth. Okay, that is one reason. Third reason is, if you look at the government has introduced PLI scheme, which means what? Let's say if you do some sort of capex and that industry that you're catering to is under this PLI scheme, then the government will give you the money over a period of time. They, if you are valid, then they will give you that capex ka money also. So over here also all the companies are getting benefited. So in that way, even though they're putting up the capacities, over a period of time they're going to get all of their money back. So a lot of incentives from the government, which is really pushing, right, which is really pushing this industry and giving it a lot of tailwind, right? So demand is good, sales growth is also good. So now what is important is, like, like I always tell, like, okay, abhi ka sale acha hai, but how does it look going forward? Because aage ka dekhna is very important. Because let's say the sales has been good, and tomorrow in con call they tell ki, like, H1 ka con call mein unhone bola ki, like, demand acha nahi hai, we do not see, we are anticipating that, and this negative kind of statement hota, then immediately, like, even though you probably have grown 100% on a year on year in Q2 and H1, and you're telling ki, like, aage jaake, you're seeing some sort of disturbance, then obviously then it is a negative thing, because aage jaake growth stall hone wale, which is a bad news for an investor, right? So let us see how is the guidance over here, how is it going over here. Like I told you, this company has been guiding for like a 35 to 40% CAGR for the upcoming years, right? Now, how many upcoming years, I do not know that, okay? But other than that, they've also told, like, see, until now they've been growing at a 50% kind of growth rate on a year-on-year basis, and they're telling, like, aage jaake bhi, that is going forward also for the next 2 years, that is coming from this year FY25 and FY26 over the FY24 base, like on a year-on-year basis, they will grow around 40 to 50%. 40 is something they're doing conservatively, but 50 is also that you can expect. So they are planning around 700 crores of revenue for this year, 700 to 750 crores of revenue. That is roughly over here. Can you see 31 to 41% growth over FY24? And similarly for the next year, that is in FY26, they're planning around 1,000 to 1,200 crore of revenue. So as you can see, right, well, very bullish, very positive kind of statement that you're getting. Now let us see, how is this growth going to come from? Like where is this growth going to come from? Of course, there is demand also, but aage jaake, like, do they have a place? I mean, in the existing plants, like I told you, they have 6 plants. In the 6 plants, what is the capacity? Do they have place or not? How is the capex going to be, so that this growth, this numbers that is there, 700 crore by this year and 1,000 crore by the next year, so that you can achieve. Okay, it's recording. Okay. Yeah. So now let us look at the capex. So for the next 2 years, that is for FY25 and FY26, they have a total capex of around 80 to 85 crore planned. Okay. Now, before we go over here, this could be confusing. Let me start over here. Okay. Now there are 3 different types of capex that they're doing. Okay. We will go from the bottom to the top. Okay. So the first capex is where they're introducing new products. Like I told you, now they have AC, then they have that LED light and certain components that they're manufacturing. They want to introduce another product. One of the reasons they're doing so, as you know, AC ka maximum sale happens in Q1 and Q4. Why? Because in Q1 and Q4 we have March to May, and March to May is the best season for ACs. Now what usually happens is, sometimes, like, of course, see, this time we had a very favorable, very nice summer. I mean, not nice summer, it was harsh for all of us, right? It was too hot, but it was very good for all these companies, because they were able to sell more ACs than usual, right? I mean, in fact, actually, this is FY24. Now, FY23 was the worst year in the last 40 years for AC companies, like absolutely the worst. Can you imagine? In the last 40 years, FY23 was the worst. And in FY24, in the last 40 years, it was the best year ever. Okay. So you can imagine, right? Like, although these people might, a part of these people's industry, like, although Q1 is the best season and all, a part of it is getting dependent on, like, how favorable the weather is. And this is something nobody has control over, right? Like, we can't tell, like, sitting today, I can't tell you, like, agle saal ka March or April mein kaisa summer hoga. So as a result, like, let's say, already, first of all, you are a very seasonal company, and on top of that, let's say, aage jaake summer nahi aaya, to then the dependency, and you're having 80 to 85% of the revenue coming from one product, it is a bit risky, right? So what they're trying to do is, to reduce the dependency on AC, they're trying to enter new products. So 2 new products that they're entering is water dispenser, which they have already started, and the second one they're doing is your refrigerator. Like I told you, right, we saw in the business model also, right? Where is this? Yeah, we saw in here, na, commercial refrigerator. So this is also what they're trying to do. Okay, so for this refrigerator, they're putting up a new plant called as in Chennai. They're putting up a plant, and for this they've already spent I think 25 to 35 crores in capex. So over here in Unit 8, we are going to see production of refrigerator. By the way, this unit is already already up for trial production. In Q4, you will see the production contribute to the revenue, to the top line. And in the next 2 years, they're probably targeting around 150 crores in revenue to come from this refrigeration space alone. So this is one product. The second product that they're doing is they're introducing reciprocatory compressor. Now, as you know, for your AC to work, you need a compressor. You might have heard na, agar compressor kharab ho gaya, to AC mein thanda hawa nahi aata. So there are different kind of compressor, reciprocatory compressor as well as rotary compressor. This rotary compressor jo hai, is will be used in AC, and this reciprocatory compressor jo hai, it will be used in fridges and other electronic units. Okay, here these people are going to set up. They're going to enter this reciprocatory unit. So two new components, right? One is refrigerator, the other one is this compressor. Okay, the other is, let's say there could be some other small electronic products that they can do, that also they would start. No, they haven't given, like, how do I put, like, exact what kind of products, but they're looking for, like, probably within the existing components only, different SKU. So one, like I told you, new categories is one. The second is backward integration, like I told you. So like right now, whatever the ACs that they have this LED lights and all, right? For all of this, they're going to do like a backward integration. So this way, again, their margins also would improve over here, right? Like, for example, see, remote car manufacturing that they have, they would increase it, right? Different tools that are there. This is the second type. The third type is, with the existing capacity that they have, they want to improve it. Like I told you, AC mein there are two types. One is indoor unit and outdoor unit. Now, indoor unit ka jo plant hai, it is already running at 60 to 80% ka capacity utilization. But outdoor unit jo hai, they're seeing a lot of demand, and right now it is at 50%. They also want to the existing capacity that is there, they want to take it up to the maximum capacity of this outdoor unit. Not just that, in this year they are going to increase this outdoor unit jahan pe manufacture hota hai, in unit 3. Yeah, in unit 3, can you see? This is where they're manufacturing the outdoor unit ka AC. There, they want to increase by another 20,000. Similarly, with the LED lights or LED lamps that is there, yahan par also, whatever the capacity is there, they want to increase the capacity. So like I told you, three things that are happening. New products are going to come. And like I told you, this refrigerators and is a bit of a higher margin compared to your AC. AC 6 to 8% margin. Refrigerator is a bit higher than AC. Reciprocatory compressor is around 7 to 8%. That is one. They're doing a backward integration, and they're going to improve the existing capacity also. So greenfield bhi ho raha hai, brownfield bhi ho raha hai yahan pe, theek hai? And yahan pe one of the reasons, again, just to give you a bit more in-depth information, why they're doing reciprocatory compressor compared to rotary compressor. Like I told you, na, rotary is AC mein jata hai, reciprocatory goes to fridge and other things. Like, and you might also question ki, like, arey plate na, AC mein to 80% ka hi revenue aa raha hai na, why can't they do that and backward integration? The reason is because the investment for rotary compressor is way more compared to reciprocatory. And right now, where the company is at, that wouldn't be a good RO, return on the capital that they're investing. This makes sense. And also over there, in the rotary compressor, when you talk about, like, there is no ban on imports on that particular part as much as for reciprocatory compressor. So obviously, people would prefer. See, let's say when there is a ban on import, and then you are bound to work or get from local producers, then it makes sense. Now, obviously orders will come over here. So that is the reason that why these people are doing reciprocatory compressors over rotary. And also, like I told you, the reciprocatory is used widely because rotary is mostly used in AC. Reciprocatory can go into fridge and other components too, right? So this is the reason why you see them doing this. Over here also, I told you, the capacity they're increasing. Can you see lighting ka bhi, whatever the capacity that is there, right? 40, how much is this? Is it lakhs? I do not know if this is in lakhs or is it or what, but from 40, they're going to increase into 60. Similarly, indoor unit is going to be the same. I told you, right? Outdoor unit is at running at 50% capacity, the current plant. They want to improve the capacity and also take it up to, increase that capacity also by 20%, right? So here also from 4 lakh to 6 lakhs. Similarly, over here, water dispenser jo hai, now they're doing 1.5 lakh units. They want to take it up to 2.5 lakh units. Oh, this is lakhs, by the way. right? Yeah, 1.5 lakh units to 2.5 lakh units. Commercial refrigerator nahi hai abhi tak. It will start from Q4, and by the end of FY26 you should see around, again the same thing, 1.5 lakh units over here. So this is the capex. Now, like I told you, let us do the you might see that the ROE of the company is around 5%, low ROE hai, right? And you might reject the business telling ki like, "Arey bhai, low ROE hai, growth itna target kar le, 40% ka growth. Where will this money come? For that existing, that 35% ka growth, that is it, from where it will come." You need to understand ki like always over here, ROE ka jo hai, you also have to look where the direction of the ROE is improving. That is way more important than looking at the absolute ROE. Now over here, as you know, the ROE ka formula is three things, right? One, you have your asset turnover, you have your margins, and you have your financial leverage that is there. Now, when you talk about asset turnover, you need to have more volumes, and you can see over here with this existing capacity that they're increasing, right? Obviously, यहाँ पे आपका volume growth आने वाला है, आपका asset turnover यहाँ से आने वाले. That is one of the reasons why the ROE improve. The second reason for ROE to improve is what? Margins. Now, how will margins improve? Like I told you, they're coming up with new components, right? Like we're seeing this refrigerators and all. So of course, these new components will give you the value growth. In fact, as of now, the EBITDA margin is 9%. The company is planning or aiming to take this from 9% to 11% is what they're targeting also, with the introduction of this new product, right? Or yahan pe another important thing, please understand, product mix change is happening. As of now, you have 80 to 80% of the revenue coming from AC. Going forward, by next year, probably by FY26, we see that AC will become 50%. Then we are going to see refrigerator come in, that will contribute another 10-15%. We have the LED lights again contributing around 20%. So product mix is changing, and the mix is changing towards the higher margin. So this is another reason why you will be seeing an ROE improvement. And the last thing is financial leverage, which is debt. They already have debt in the sheet, and if you're able to use debt for growing, and from that you're going to able to churn it into the bottom line, and get some significant sales, and that gets translated into bottom line. All in all, great. All in all, well. So all of the three reasons why you will see that the ROE will improve from the current 5% to probably a double digit in a couple of years, right? Now we are done with the other thing. Let us talk about the guidance. Like I told you, see over here for this year, I think they're targeting the PAT margin. You do not see improve. Like we know the target of revenue, but the PAT margin that is there will be in 2 to 3% only, because they're going to follow up with that accounting statement. जो accounting कर रहे हैं, they're not doing a straight line accounting, they're doing that other accounting. That is why you're going to see 2 to 3% only. Okay. Okay. So we will do a valuation calculation over here, but before that, understand FY24 ka revenue is 531 crore. FY24 ka PAT is 10.17. Understand another one thing. A lot of you all in this 10.17 crore, there was a tax benefit of 1 crore. Not just that, with all the AC companies that you see, you are going to see a PLI benefit that will be added to the bottom line, which means what? For all the capex that you have done over a period of time, the government will keep giving you that money. Let's say if you have spent 30 crore in capex, then the government will at least give you half of it or more of it, like whatever the percentage it is. You will get that money back from the government over a period of time. It could be 2 years, 1 year, over that. So always remember, with all the so don't exclude this from the bottom line, because all of the companies that are there, whether it is Amber, PGL, EPAC, or this new company Virtuos, everybody are going to get this scheme. Everybody are getting it. Okay, so it is okay to compare the bottom line with this. In fact, for PGL, I think it is 30 to 35 crore of is coming in the bottom line. I think 30 crore mostly. Okay, these people as of last year they got 3.5 crores. This year I have no clue how much they're going to get in terms of bottom line. Okay, so anyways, we can expect a sales growth of 31 to 41% this year, because the FY25 the revenue expectation or the guidance that they have given is to achieve 700 to 750 crore. So last year FY24 revenue was 531 crore. So if you see, sales growth on a year-on-year basis is going to be 31 to 41%. That is target number one. Target number two is we have to calculate what will be the expected PAT for the coming year. That is the FY25 per year anyway. How much do you see the PAT on a whole year basis? Okay, like they told, the PAT margin, it could be in the range of 2 to 3%, maximum 3%. Negative, like not negative, sorry, on the lower end it could be 2%. So we know PAT margin ka formula is net profit divided by sale. From that formula, right, we can calculate what is the expected FY25 ka PAT. Now see, whenever I'm doing the valuation calculation, I always like to be conservative over here. Okay, so you can do the same thing with 750 crores sorry, you can do the same thing with 750 crore also, because there is a possibility they will do even 750 crores, maybe not, but I'm going to take it on the lower end of 700 crores. And I've given different pat margin, that is 2.53, because like I told you, the pat margin can lie between 2 to 3%. Okay, and if you do that from this formula, you get that the expected pat can range between 14 to 21. And FY24 ka pat kitna tha? 10 crore. So when you compare 10 and all these numbers, when you take, the pat growth will be on a year-on-year basis, it could either range from 40% to 100%, right? So overall, irrespective of, and the sales growth is between 31 to 41%. So irrespective of whatever the pat margin is, it could be 2% or 3%, lower end or higher end, you will see a good amount of operating leverage that will be visible for this company. Okay, now you have to calculate 1 year forward P with this expected pat that you have expected. That is 1 year forward P is whatever you have the pat divided by the market cap that you have, right? So 1 second. I think I did this. Mm. Yeah, this is wrong, guys. It is ulta. I have done it wrong. Market cap. 1 second. Let me correct it while I'm. This is market cap divided by expected pat. This is the formula. I have written ulta over here. Yeah. So if you do so, then for a 31 to 40% ka growth engine for this year, or a 35 to 40% kind of CAGR for the upcoming years, for the, at least for the next 2 years, what you can expect, you are going to be paying a 1 year forward P or one-time earnings of between 43, from a P of 43 to 65. That is the range. Now, of course, this entire P ka calculation can also change if the revenue over here is 750 crore. This is on a conservative side I've taken, and based on that, you can, like, you can also do the same calculation by taking 750 crores in revenue. I like to be conservative, that is why I've done that. Okay, and over here, the other valuation that I want to do is valuation 2.0, like I told, where I'm taking a 2 years pictures. Okay, because basically, let's say 700 crore is something that they're targeting for this year, and 1000 to 1200 crore is they're targeting for the FY26 year. So you can, like, see, this is why over here I don't like to give my valuation, is because I always like to show you the calculation of valuation, but I don't like to give you my personal view, is because valuation is subjective, right? First of all, the entire calculation of valuation is flawed because we are assuming things over here. The second thing over here with the valuation calculation is, right, like I told you, the entire thing is done based on assumption and the conservative thing. Now over here also, see, this calculation, this is more of something very practical approach, I would say, for 1 year forward P compared to 2 year forward P. In this 2 year forward P that we are doing is a bit flawed. Like I told you, it is subjective, because somebody can, like, see, somebody can take, sitting today, they can take a 2 year view, and from that perspective, today the stock might be cheap. But for somebody taking a little bit of shorter frame view or a shorter time view, the same stock can also look expensive. So it is a very subjective thing. That is why I don't like to give my opinion. Okay, so over here, valuation in 2.0. By the way, before I go to explain the same thing over here, there are a certain kind of flaws, and I will explain you what are the flaws over here. One, we are assuming like for FY26, the PAT margin will remain the same between 2 to 3%. But this is not the case. The PAT margin can go even about 3%, because we have new product line coming up. The sales will increase as a result, right? We will see the ROE improving. All of these factors are there. We are also going to be seeing the margins improving. So when there's a product mix change happening, and because of which we will see the margins improve, not just that, we are not going to be seeing the same depreciation that is there even in the next year, right? So that is another reason. And of course, right, if your PAT margin will increase over here, obviously the expected PAT that is there for FY26, even that will also increase. So that is a flaw number one. Okay, flaw number two, why I like to always take 1 year approach is because, see, we live in a very dynamic world, right? See, even whenever I'm going to buy a company, I want to buy a company and I want to hold, even I want to hold it for 10 years, 20 years and all, yeah. But that is not the case now, because see, something can happen. One war is happening, happy supply chain issue again, and your entire company is not able to clock the sale, right? So we live in such a dynamic world, and you do not know anything that can happen. Over here, the biggest problem is, we know this year summer has been better, but who knows in FY26, that is next year that we are going to see, who knows the summer might not be great, right? And because of which the guidance that they have given 1000 to 1200 crore, that is there. Probably we are assuming कि like अरे ये तो पक्का ही पक्का 1000 करेगा, पक्का ही पक्का 1200 करेगा, right? Here what will happen कि like who knows, they might not be able to do. So this is the second thing, because you have a very seasonal kind of industry. Maybe because of this, again, that is another flaw. The third is, like I told you, it is a very conservative approach, because here the revenues can even change to be around 1200. Here the conservative, that is what I'm telling. See, whenever I buy a company, I like to be conservative. I like to be all hunky-dory and look at the guidance and invest based on that. But also at the same time, I also like to be, I am hopeful when I'm investing in a company ki like, array, I wanted to do better, I wanted to achieve the guidance, but at the same time I'm conservative in my valuation approach, right? Because you need to be, I would say, a good combination of optimistic. You need to have trust on that company that they will do, at least you're hopeful, but also pessimistic in terms of here also. And that, for me, the pessimist comes over here in the valuation calculation. And market cap over here, I'm assuming today's market cap, of course, right? As we go, when the sales increases, everything, things get better, the market cap also stands the chance to double also from this existing base. Hardly 1000 crore ka market cap hai, shayad 6 months down the line, after this year, and the market cap is probably doubled also. So we are taking the 2-year valuation metric, looking at today's market cap. So these are the flaws. So the same calculation we will do. We are assuming that the sale is on the lower end, 1000 crore. PAT margin ye ho sakta hai. I mean, the PAT margin will remain stable. Yahan se improve nahi ho sakte, but it can improve, right? And based on this same formula as this, expected FY25 is PAT margin into sales, right? You will get the PAT as to be 20 to 30 crore for FY26. And iske hisab se, if you take the 2-year forward P, same 918 crore market cap that is there, divided by your PAT that is there, you will see that the 1-year forward, not 1 year, sorry, 2-year forward P can lie between 30 to 45. But I would rather take this approach where the 1-year forward P is between 43 to 65, right? This is what I would like to take for a 40% kind of growth engine. Okay. Now we've spoken about all the good things, right? Like, oh, sales growth is there, very nice company, ambitious promoter, zeal hai promoter में, capex हो रहा है यहाँ पे, product mix change हो रहा है, ROE improve होने वाला है यहाँ पे, margins improve होने वाला है, sales अच्छा है, आगे का guidance भी very अच्छा है, and they're very very confident about achieving this guidance. They're not taking back the guidance and everything, right? So all in all, everything is hunky dory, everything is good, but it is also our responsibility to see what are the other risks that is associated with the business. The first risk is over here, execution risk, where probably they won't be able to achieve the top line. Now, this is not just with any other company, that is there with every other company. Second is fallback in demand. Like we know, this year, in the last 40 years, this is the best year for any AC company. But shayad, agar, let's say, AC ka, let's say, if it's not good, probably, let's say the condition is very bad. Who knows, next year, summer is not at all harsh, probably, that also can cause, right? The third is the voltas. Like I told you, in the top line, agar aap dekhte ho, there are 2 customers which is contributing 80% of the revenue. One is Voltas and Panasonic, and Voltas is contributing almost 70%. Now over here, Voltas kya kar raha hai? If you catch up with the concall of Voltas, you see that they're constantly telling ke like, आगे जाके we would want to do all the, we want to start manufacturing in-house यहाँ पे, ठीक है? And see, when you are getting as of now, see, for the next 2 years, that is there, until 1200 crore ka jo target unka FY26 tak, entire capacity is booked for Voltas. Okay, they do not, in spite of this Voltas being their bigger customer, or Voltas is doing everything in house, they do not see over here any problem. But it is still a risk, right? Ki like aage jaake, let's say, is company say anything that can happen. I mean, world is infinite. I mean, anything and everything can happen over here, right? Let's say kuch hota hai yahan pe, maybe they take the order back, maybe they don't want to do it, whatever, then it can be a very very big dhakka over here, right? Because 70 to 75% यहाँ से रेवेन्यू आ रहा है. सो कस्टमर का कॉन्सेंट्रेशन, एक कस्टमर में जो कॉन्सेंट्रेशन आ रहा है रेवेन्यू में, वो बहुत 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 ज्यादा है. Although I understand in FY26, in the year end, we will see that hardly AC का contribution is 50%, but as of now, at least as of this year, अभी भी 70 to 75% आ रहा है. So it is still a considerable risk. So this is about Virtuoso Optoelectronics, where we are getting a 40% kind of growth engine, or a 40% CAGR for the next 2 years, at a valuation on the lower end of 43, and on a higher end we are going to see the valuation to be around 65. So it's up to you to decide how do you find this company, whether it is cheap or expensive. Would you look at a 2-year valuation view where where the guidance is intact and everything, and you would continue to continue to hold, buy, or do whatever you want with the company. But anyways, that's that about Virtuoso Optoelectronics. In the next video, we've already done all the four in the AC manufacturing space. In the next video, we will do a peer-to-peer analysis of all the four companies. Again, I'll do the same thing. I'll share the screen and do, because it's too many numbers. Yeah, I will upload that video also by tonight. By tonight 9 o'clock, I'll upload the P2P ka video. Okay, so that's that. Yeah, that's that. I'm just too tired and thirsty now. Anyway, see you in the P2P video in the evening. Bye, guys.